Hey guys, in the last video I mentioned how Bitcoin would continue to consolidate and likely retest these lows. And as we've seen when we dropped below the short-term holder cost basis, well, here we are. So today Bitcoin just hit a low of around 104K and we're now trading at about 107K, I think. And everyone's asking the same question, right? Is it still mid-cycle consolidation or is the bull market actually over? And so I'm going to give you two key levels that, in my opinion, will help us to decide everything, right? So one level below us, one level above us. In my last couple of videos, when we initially broke below the short-term holder cost basis at around 114K, I said Bitcoin would likely trade in a boring range while it finds its footing, right? So last Friday, when we saw that 105K low, we shook out a bunch of leverage and weak hands in the process. And now we're back at around 107K. And we've been approaching these two levels that I'm going to talk about and just try to determine whether this is either mid-cycle chop, like I've been saying, or whether the bear market is actually, starting. The first level is that 100K level. And so this is both a psychological level and as well as being an on-chain significant level. And here's why it matters. So if Bitcoin breaks below 100K and stays below it for a couple of weeks, not just a wick or a brief dip, but actually having sustained price action below six figures, that would be the first major warning sign that the cycle structure might be changing. So on-chain, from an on-chain perspective, there's this metric called MVRV, and this is the chart we're looking at right now. This is the market value to realized value. So it compares Bitcoin's current market cap to its realized cap. And so the realized cap is basically the aggregate cost basis of all Bitcoins on-chain. So what everyone paid for their coins when they last moved them on-chain between different wallets, and we're tracking each and every wallet, right, to calculate this metric. And so the MVRV mean, or the zero standard deviation level, which is in the gray here, represents Bitcoin's historical fair value, where market value equals what investors actually paid on chain. And right now, that MVRV mean price is sitting at around 101K. So throughout this entire cycle, that level has marked every major consolidation support, right? So first at 40K, we held it, and then at 50K when we had that consolidation, and then at 70K, and now we're right above it at around 101K, obviously. So if we touch 100K or wick below it, that's fine, in my opinion. If we, for example, if we break below or drop to 98K and immediately bounce back above 100K, that would be a flush, in my opinion, not like a trend change. But if we're trading at, say, 95, 98K for 2 or 3 weeks, and then we, retest this level and can't hold it as support, essentially unable to reclaim 100K, that's when I'll really start to question the bull case. And I know on a shorter term time frame basis, Bitcoin has been putting in lower lows. Okay, many people are mentioning, correctly, that we've been putting in major divergences between some metrics, but I really want to zoom out here and look at what the on-chain data is telling us. And even if we do see a break below that 100K level, I still think you'll get like a sort of a bull trap to the upside, say 115K, just to shoot a number out there. For example, so like if you truly think that the bull market is in, you'll probably still see that play out. And we saw this occur most prominently in the 2017 cycle. We saw a major dump from the all-time high around 20K. It's around 10K on an intraday level. I only have the daily close here. But then we saw a major, bull trap at around 17K. So something like that happening is definitely not out of the question. And so this kind of brings up the second key level, the short-term holder cost basis, currently sitting around 114K. So this is the orange line, the short-term holder cost basis, and the gray line is the MVRV mean, like we talked about. So this is the average acquisition price of everyone who bought Bitcoin in the last 155 days, not the entire market, the past 155 days. And so right now we're trading below this orange level, right? And in bull markets, typically will hold above this level, or at least reclaim it quickly after brief dips below it. So from an on-chain perspective, when we're sustainably below the short-term holder cost basis, it means that recent buyers are underwater, which essentially creates this selling pressure as shorter term buyers start to either panic or cut losses, right? So if we look at past bull markets, we've had plenty dips below the short-term holder cost basis that effectively resolve back to the upside. So the key question is, can we reclaim it? So for example, you saw in 2018 when we broke below this level sustainably and held it as resistance at that, and then subsequently held it as resistance again and held it. So if you see, as we get back above the short-term holder cost basis, it typically can resolve in a resistance level in bear markets as shorter-term holders are selling back into strength where their average cost basis are, and they're saying, okay, I want to just get out of this market because it's a down-only market. All right, so here's my thesis. If Bitcoin breaks below 100K for multiple weeks and can't reclaim that 114K short-term holder cost basis, that's when I'd seriously reassess that bear case. And so that combination would suggest the cycle structure has broken, right? So right now we're in that danger zone, trading at a 107K, which is below the 114K short-term holder cost basis, but still above 100K that MVRV mean. So the question is, do we reclaim 114K and continue the bull market, or do we break below 100K meaningfully and confirm a bear market? And so just another quick important thing I like to ask about this cycle, and I think is important to ask, with all the new institutional adoption, ETFs, all the new buyers and businesses and strategies to hold Bitcoin, saying, okay, we're buying this asset to hold it because we know its intrinsic value, we understand it, and this cycle. So the question is, this cycle is if we see these newer buyers or these short-term holders really start to display more of say a long-term holder behavior where they hold their Bitcoin throughout 20%, 30%, even maybe 50% drops throughout bear markets, what will they do? Will they sell? Will they hold? That's the $1 million question, right? And so another key metric that I like to look at, and which is helpful to understand why I'm personally leaning bullish despite being below the short-term holder cost basis, is we still haven't experienced the unrealized losses that we've seen at the beginning of these bear markets. So this is the net unrealized profit or loss on chain. So NUPL for short, net unrealized profit and loss, NUPL. And so this measures the total profit or loss of all Bitcoin holders. And so when bear markets start, we always see massive spikes in unrealized losses. So if this metric, when this metric goes down into the green territory, right? We saw this in 2018, we saw this in 2022, in 2015 and 2012 or 2011. We saw whenever we go into the green territory, right, we subsequently always hit the darker green and go even into the blue territory, right? So right now we're still in relatively neutral territory. Yes, short-term holders are feeling pain, they're underwater, but the overall network is still in profit and long-term holders are still sitting on massive gains. So you can also break this down by cohort, so either long or short-term holders. And you can see that this is the long-term holders are still feeling, they're still feeling pain. They're not feeling pain. These are the long-term holders who have typically bought, years ago. They're not realizing massive losses yet, really just going sideways, which, we haven't really seen in prior cycles before. So that's interesting for sure. So right now we still have about, I think it was like 78%. Yeah, so 78% of Bitcoin is in profit and around 22% is in loss. So the on-chain data is still saying, this looks like a mid-cycle consolidation. And so if we look at the monthly returns, I still think, Bitcoin will hit all-time highs sometime between now and the end of the year. That's my base case. If we hold above the levels I mentioned in the beginning of the video, Q4 has historically been when Bitcoin makes its major moves. October, November, December are all major green months for Bitcoin. But say if we get to December and Bitcoin's still trading at 100K or below, unable to make new highs, that's when I would say, okay, the cycle timing thesis Q4 is wrong. Either this cycle is lengthening by say 1 to 2 months, or we already saw at the top at 126K. And so December in my eyes is the absolute deadline. So if we haven't reclaimed and held above 114K, short-term roller cost basis by then, if we haven't made new highs, if we're still chopping around 100K, that's a major red flag that the bear market could be upon us. So to sum it up, here are the two sort of scenarios I'm watching. So scenario one, bull market continues. Bitcoin reclaims 114K. In the next few weeks, we hold above 100K during any retest to that level. Q4 brings the retail FOMO waves that we've seen and new all-time highs come. This plays out like 2017, 2021, mid-cycle consolidation. And the peak happens sometime between now and December, right? And then scenario number two, the bear market has begun, right? So firstly, Bitcoin breaks below 100K, stays there for multiple weeks, can't break back above it. And secondly, we can't reclaim that 114K level and perhaps get say a bear trap or a bull trap at 115K or somewhere near the short-term holder cost basis. And so thirdly, December arrives and we're still at or below 100K, or unrealized losses start spiking as more holders go underwater. So these are the two paths that I'm looking at. And the beauty of Bitcoin is that the on-chain data will basically tell us which path we're on in real time. We don't have to guess, right? So either we're below, or so right now we're below the short-term roller cost basis, right? That's not great, but we're still above 100K, and that's important in my opinion. On-chain data shows no bear market capitulation yet, but that sort of time is running out for the Q4 rally to materialize. And for me personally, I'm not making any major moves right now. So this consolidation phase is pretty much exactly what I expected. If we reclaim above 114K, I will be more confident in that bull case, which is sort of where I'm leaning towards right now. But nothing's for certain. No one has a crystal ball, right? So you can verify all these charts and more yourself at chartinspect.com. Watch these two key levels, 100K, 114K. And these levels update every day, so you can see the short-term holder cost basis has gone up over time in bull markets, and it does go down over time in bear markets, right? So watch how December plays out. More importantly, make your own decisions based on, your own risk tolerance. Nobody has a crystal ball. Nobody knows exactly what the market's going to do in real time. So this consolidation is basically testing everyone's conviction, right? That's the point. So, stay patient, stick to your plan, go outside, touch grass, exercise, and I'll see you in the next update as this plays out. Thanks for watching. I'll see you in the next one. Bye.